We're back 7:41 in this morning on today's Consumer, your guide to the fall real estate market.
And it's kicking off with encouraging news. Mortgage rates are falling, with the 30-year fixed rate now at its lowest point in nearly a year.
This is good news. Here with everything buyers, sellers, and owners need to know, NBC's senior business correspondent Christine Romans. Christine, so what are we hearing about these mortgage rates?
The housing market has been in a deep freeze for about 3 years. Signs of thawing, maybe. You've got these mortgage rates falling a bit here. 11-month low, 6.29% is the 30-year fixed. 15-year fixed, 5.7. For some perspective, back in April, it was like 7.5% for a mortgage. So that's some significant savings if you are able to lock in a lower mortgage rate here. But still, affordability has been a real problem for a very, very long time. You've got most zip codes, frankly, people with median income can't afford to buy a house right now. So we're hoping this is a movement in the right direction.
Yeah. So that's, again, like I always say, when the news usually comes on board, usually there's a churn happening they're a little bit behind the ball a little bit, to use a sports analogy. Please don't forget to like and subscribe. So, yes, interest rates are coming down. Everyone's clamoring and getting excited from the rate cuts that Jerome Powell is, like I've said in prior videos, he's in a pickle. So now with the unemployment that's ticking up and jobs not being able to, get people back into jobs, they may be getting into jobs, but not as higher paying jobs, which, that's why even the unemployment number probably would be higher, but it's not. All things considered, it's still relatively low. I know that sounds crazy, but even if it went to 5% unemployment rate, you still have 95% of people working. So it's all relative, right? It's still that would be a good job market still. So with him having to drop the interest rates, that's going to be great for the real estate market because it'll start to soften up some of these, soften some movement. However, it's still not going to fix the problem. And like she's alluding to or getting ready to allude to, it's affordability. It's always been affordability. People buy on payment when you can't afford. That's why these interest rates have mattered so much, because people couldn't afford the payment because the cost of money was too high, right? If your payment was $2,000, you're like, oh, I can make this work. And it doubled on you. Like, whoa, wait a minute. Let's calm down, So affordability is a problem. And then you have the reason why the job number is so important is because if jobs aren't paying as much and there's not that many high paying jobs available, people can't then afford payment and they can't afford to buy high real estate. The problem with dropping real estate, the rates right now in this environment, is that you then cause prices to go up. So again, I think the housing market, unfortunately, it's still just in a pickle. And we've dumped so much money into the system back in 2020 and kept rates way too low for too long. For most people, buying a home right now is not feasible. And like I always say, if you're one of those rare people that you want to buy a house, it's always a good time to buy. You just got to make the numbers work. You have to put on your investor hat and think like an investor and try to find a good deal. How do you find a good deal? You learn the market you want to be in down to the zip code that you want to be in, the school district, whatever. Check all your boxes and you study that particular area of the style of house that you want. You want a 3x2? You're going to be in that market for a while, for 60 to 90 days, looking on Zillow, Redfin, all the stuff, and seeing what things are trading for. Once you got a handle on that, once you know average, 60 to 90 days, at that point, you'll be able to know when a good deal pops up. If it comes in below average, you're like, wait a second, this is a unique home. Why is it lower than everything else that I've seen? Then you can go in and make your offer and move from there. But don't pay list price. Not in this market. Really not ever if you can avoid it. But that's just my take. Let's continue on. Let's see what she has to say.
Meanwhile, next week you've got the Fed Reserve that's meeting, and it's widely expected that they will cut that key benchmark rate. What could that do to the housing market?
In part, these mortgage rates are falling in anticipation of the Fed cutting those rates, but maybe it'll be the first in a series of rate cuts, and that would be good news for the American housing market. Again, a housing market that has just been frozen solid for buyers and for sellers here. But those mortgage rates coming down, if you look at a typical loan, let's say a $500,000 loan, you put 20% down on a $500,000 loan. The difference between earlier this year and today on that same mortgage is a few $100 a month. So that's real savings for the housing budget if we can see these mortgage rates continue to fall.
So with this in mind, then, is now the time to get into the market?
You know, if you need to move for your job or you're trying to find a better school, I mean, then yes, you should try to find a way to move into this mortgage market right now. But that said, mortgage rates could be lower in the months ahead. I'm a big fan of a 30-year fixed rate mortgage because I'm very boring and I take no risk. But there are adjustable rate mortgages. If you think that mortgage rates are going to continue to fall and you need to move, you can explore some of those kinds of products.
Quick.
This is terrible advice. Stay away from adjustable rate mortgages. This is just my opinion, and maybe I'm dealing with trauma, but stay away from. I can't believe she just said this on live TV. This is what I'm talking about. News is always behind, and they're always giving bad advice. Man, rarely will you hear me say, "Oh, that was good advice" from a news anchor or whatever. And she's the business aficionado for today's show. How do I get these jobs? Listen, don't get an adjustable rate mortgage. This is not the economy to do that in. Maybe for extremely unique cases. For if you are moving to take a job, that is the worst thing you can do. If you get in there and for whatever reason you don't like the area, or you move into an area that you do not know, and you buy something just right away because you're itching to buy in the area you do not know, and then you realize, oh, I don't like it here, and you're stuck, and then that loan balloons at no, it's a headache. Don't do it. When you're in real estate, the beauty of real estate is fixed debt. When you can fix the debt for 30 years, even better. 15 years in some cases, if it makes sense for you. Most people it doesn't make sense for, but I would not. Don't do it. Don't do it. Bad advice. A lot of people got their shirt handed to them in 2008.
Quickly, refinancing.
Yeah, you know, if you have at least a percentage point difference in your mortgage, you can start to talking about mortgage rate, rather. You can start to think about refinancing. More than 1% is better, because then you get more savings and you don't just pay a big closing cost for not very much value.
Okay,
Christine. Nice to see you.
That's true. I'll agree with her on there. See, we find some common ground. Generally, the rule is if you're looking to refinance, and you got to run your numbers right and run them at every scenario. If you're pulling out however much, 50,000, 25,000, so forth, so forth. And what you want to do is you want to shop it with a lot of different lenders, right? Don't just do it with one lender. Shop it around. And when you go to the other lender, you tell them, oh, by the way, this lender over here said he was going to do it for this. And they generally say, oh, yeah, prove it. And you give them some little mock-up, and I usually black everything out so they can't see. And like, oh, this guy's willing to bid it for this. And they'll match, they'll have them competing against each other, and you can work that down. Little hack there. But if you can at least, the rule is if you can at least get a point, that's when it's worth doing it. And again, you got to look at all the numbers. Don't just listen to a guy on YouTube. Okay, I'm just a guy on YouTube. I'm not your real estate broker or anything like that. I'm not giving you advice. I'm just telling you what the general sense of how you can look at it. But overall, yeah, we're going to see some softening in the market. But I don't think it's going to be affordable. I really don't. Let me know what you guys think in the comments. Please don't forget to like, comment, and subscribe. And we'll see you guys on the next one.